I can see members streaming in style. We have around 19 members who have already checked in. So Mr. Alex, karibu sana. I can see you here. Pia Kabana, Cyrus Mwema, Donata, Fabiola, Joan, Lilian Kamau, Linda Maruti, karibuni sana and feel at home. Margaret Gishohi, karibu sana. Mary Maina, karibu. Michael Francis, I can see you here. Thank you for keeping time. Monica Gashusha, karibu sana. Monica Nyambura, Nelson Ojango, Murerwa, Simon, Rosemary, karibuni sana and feel at home. Susan Omondi, Wanjiku Masharia. Tell us your good name, the company, the name of your company, and where you are right now. Karibuni sana, karibuni sana. We're giving members like 3 minutes, they join, then we can kick off our discussion. So karibuni sana. Just below the screen, there's a chat. There's a chat box. Just type in engage us. Tell us your name, the name of your company, and where you are from. I know it is very cold. You can take a cup of coffee as we discuss. All we can assure you is that it is a very engaging and enriching session today. And remember, today's session, we're discussing a very, very serious and important discussion for business owners and managers of SMEs. And we're discussing about, is your business one mishap away from shutting down? It's a very technical question for business owners. I can see Lilian Kamau is here from ICA Lion. Hey, karibu sana Nairobi. Karibu sana Lilian. Engage us, just in your chat box, just tell us your name, where you're from in Nairobi, the name of your business. Let's engage as we give our members, we're giving them 2 minutes, then we can commence our discussion. Karibuni sana. Just below the screen, there's a chat box there. Type your name, the name of your company, where you're from. We know we're engaging different people from all corners of the world. Thank you very much, dear Kama. This is from Republic of Congo and the organization Universe Academy. Hey, karibu sana, welcome. I think this is French, bienvenue, dear Kaba. Karibu sana. So today, we're discussing a very critical issue, especially for SMEs. And I can assure you, we've got a very great team or set of panelists who are going to dive into this discussion and see how far we'll go. Yes. Yes, Susan, I can see you. Thank you very much. Let's engage. Your name. I can see our members are still streaming in style. Yes, karibuni sana. So we need to start immediately. And I'd like to introduce a very great team on my side. But before we start, I'd like to welcome Mr. Robert, who will give us a short summary or a summary of information about Wild International. And then we can kick off. I'll introduce our panelists and then we dive into the discussion of today. So Mr. Robert, karibu sana.
All right. Thank you so much, Bwana Olympia. On behalf of Wild International, let me take this opportunity to just welcome all the participants present with us this evening. Asanteni sana for making the time to join us. My name is Robert Njenga, and at Wild International, I serve as the head of marketing and partnerships. Just a brief introduction, a brief background of who Wild International is, and more importantly, what we do. We are a business consulting firm specializing in the development and execution of strategy services. We've been doing that quite successfully for the last 20 years, developing strategies for SMEs across all sectors and SMEs of all sizes. In fact, this year we are having our 20th anniversary celebration as an organization. So be on the lookout for that on our social media pages. We are looking forward to having quite the party for that. We are also members of an organization called the Sandbox, that is spelled SNDBX. And if you look at my screen on the top right, you will see that logo there. And basically, the Sandbox is a collection of over 35 experts who are geared towards providing support to entrepreneurs. If you're an entrepreneur today and you walk into the Sandbox and you say have a challenge in legal, marketing, accounting, you name it, you'll find an expert there ready and willing to provide support to you. We say the Sandbox is a one-stop shop for entrepreneurs where they can walk in and have all their needs sorted. At the Sandbox, Wild International is the strategy expert. And as I mentioned, we've been developing strategies for SMEs for the last 20 years. Above and beyond that, we do have a very strong component of entrepreneurship support, where we run various entrepreneur support programs in partnership with various development partners. We are running a program currently with an organization called Meta. That is the company that owns Facebook, Instagram, WhatsApp. I know all of us on WhatsApp. And that program is geared towards upskilling the youth, just to make sure that they're able to expand their businesses online. We also have another program that we're running in partnership with Brighter Monday. It's called the eBiz kwa Vijana project, also geared towards upskilling the youth on how they can use various e-commerce platforms. We have another program that we're running with an organization called Aseli Africa that is geared towards providing support to agri SMEs within the East African region. So we're running that program in Kenya, Uganda, Tanzania, and Rwanda. We also have another program that we're running in partnership with an organization called World Resource Institute, that is WRI, and that is geared towards providing support to entrepreneurs who are restoring our landscapes. So entrepreneurs who are restoring the Great Rift Valley or Lake Rusizi within the Burundi, Rwanda region. We also have another program that we are running with an organization called Yunus Social Business that is geared towards, providing support to organizations that are actually making an impact or have a social impact in the community. So we have a lot of programs that support entrepreneurs. Above and beyond that, we do have a strong component of business coaching, and we're one of the few organizations that pride ourselves in working with entrepreneurs through their growth journey. So if you undertake one of our programs, if we do a strategy for you, we don't just leave you hanging. We work with you through that journey. Essentially, your business coach is your accountability partner, and they ensure whatever strategic initiatives that you've decided or are working towards, you actually stay accountable and actually achieve those initiatives. Finally, we do have a strong component of access to finance, where we work with various financial partners to provide various access to finance solutions for entrepreneurs of all sizes. So we're very, very passionate about supporting entrepreneurs, not just in Kenya, but across the African region. Today's discussion is related towards risk management, which our moderator has gracefully mentioned is a key topic that SMEs struggle with on a day-to-day basis. And I would like to take this opportunity just to thank our partners, AR, Britam, the Porter's Touch, for making time to impart us with their wealth of knowledge and experience around this particular topic. This is part of an ongoing series that we as Wild International conduct on a month-to-month basis. So every month, every last Tuesday of the month, we do have a webinar like this that revolves around a key topic that SMEs are struggling with. So as much as you're enjoying this particular webinar, head onto your calendar and mark every last Tuesday of the month, just so that you don't miss out on any insightful or interactive webinars such as the one we are about to hold. So I think with that, let me hand it over back to our very capable moderator, Bwana Olympia. Thank you all and all the best.
Thank you, Mr. Robert. I've seen Monica Nyambura sent us a text. Your business name is Divine Baby Couture. Thank you very much. And also we have Margaret Gishoy, and the company is Splash Trading Limited from all the way from Mombasa. Karibu sana Margaret. So I'll just go direct to introduce our panelists, and I'll request them to turn on their cameras. I'll start with Grace Ann Kamau as one of yes, Grace Ann Kamau. And I told you, our panelists are heavy. That's what I can tell you for free. So Grace is the head of risk and compliance at AR Insurance. And she is a no-host bad risk, audit, finance, accounting, and compliance management professional, actually who dives headfirst into solving complex and deep-seated challenges and covering possibilities that have been eluded actually previously by predecessors. And Grace, actually, she's a force to be reckoned with, proving it over and over again by spearheading and undertaking assignments in business strategy development, risk analysis, management, accounting, financial management, organizational operations and compliance, and all other responsibilities across the big 4 audit firms on the planet. And she has worked with a leading bank and also now a leading insurance company. With a combine of over 14 years experience of expertise in audit, risk management, and compliance, she leverages the experience to develop and grow novel methodologies to meet and exceed established standards and set requirements. She's a proven leader, that one is for sure, delivering responsible risk management strategies and plans that have got a long-term and positive and tangible impact towards enhancing insurance literacy, insurance risk knowledge, and products uptake in the developing economies globally. Actually, before Grace Ann joined AR Insurance Company, she has demonstrated her leadership at Britam General Insurance as the head of risk and compliance department. And prior to that, she worked at Diamond Trust Bank as the senior manager with the risk and compliance department. She was also responsible for establishing the suitability of organization risk management frameworks, plans, and systems, ensuring that they meet the regulatory guidelines, and successfully also she managed the emerging and the residual risks. In all the roles she held, Grace has collaborated with a broad spectrum of stakeholders to develop, implement, and update risk management policies and procedures to ensure compliance. She's a graduate, she graduated with an MBA in strategic management and a Bachelor of Commerce in accounting degree from University of Nairobi. She's also an associate designation with the Life Management Institute, USA. She's a certified information system auditor and a certified digital risk manager. Additionally, Grace is a certified anti-money laundering officer and a certified public accountant. Hey, this is a good one. Grace's personal profile is not just about professional achievements, actually, but she's also about values. Her superior work ethic, strong belief in diversity and inclusion, and integrity-driven nature are the pillars of her character. These values drive her to learn and motivate those around her. And as an instinctive leader, she finds personal fulfillment in helping other people and volunteering for the betterment of the society. She has volunteered for the Financial Empowerment Summit at Parkland's Baptist Mentorship Program. That's actually Eastgate and Butonge Primary School in Bungoma with her sister-to-sister mentorship program, where she has mentored young pupils in various skills and the need to pursue ambitions relentlessly. Actually, makofi kwa Grace. Down here, there's a reaction section. If you feel you've been touched, tupe makofi. A smile actually will go with it. Karibu sana, Grace, and feel at home. I will go to the next one. Our next panelist is Alice. Alice, yes. Alice is currently, she's the Chief Executive Officer at Potterstach. And we are very fortunate to have her on board because she's one of our experts at Sandbox dealing with insurance. So I can tell you at what Sandbox we already covered. So Alice is an insurance expert with over 16 years experience working with individuals and SMEs. She's passionate about creating confidence in the insurance space by guaranteeing her clients a high level of transparency. She's also she has also top skills in client service, product training, and claims follow-up. The Potterstach is an insurance agency company representing several insurance companies which together offer comprehensive insurance solutions to clients in all shapes and sizes. And they deal with all classes of insurance. Potterstach Insurance Agency based at Sandbox is an insurance intermediary company that provides insurance agency services to individuals, corporates, and SMEs so that they get the right insurance products that meet their needs. Makofi kwa Alice. Karibu sana Alice and feel at home. Actually, Alice amevaa miwani. Unamwona? With a very great top ya purple pale juu. Karibu sana Alice. Asante sana. And my last panelist, that is Simon Wanduga. Yes, thank you very much. Simon Wanduga is the head of partnerships at Britam. And he is an FCCA as the head of partnerships at Britam. He has extensive experience in the world of finance, insurance, and investments, focusing on financial analysis, sales, project management, and managing partnerships at Britam. He's passionate about technology, digitization, and partnership as the key pillars that will impact our communities and small businesses. Makofi kwa Simon. Karibu Simon. Simon leo amevaa suti, the three-piece, ndio ule pale. Karibu sana Simon and feel at home. So thank you very much. My audience, very engaging, really touched. And just to call out Susan Omondi, karibu sana. She runs runs a company as Arsenic Enterprise Limited and outsourcing office consumable for SMEs and international companies. Karibu sana Susan and feel at home. Just to dive directly into our session today. So we're talking about risk management. So I'll just in simple terms, and this one goes to, I'll start with Simon, not ladies first today, it is gents first. I'll break the rule today. So just in your own words, Mr. Simon, what do you understand by the term risk management?
Thank you, Olympia. I think I'll start by defining risk in simple terms as any situation that exposes, either an individual or a business to any sort of danger per se. And when you're talking about risk management, then we're talking about strategies or ways that businesses have put in place to mitigate this risk from happening, to ensure that either their businesses are not affected in the event that these situations arise. So I'll put it simply as just a strategy of mitigating such outcomes. Yeah.
Thank you very much. I'll go maybe Grace, your simple understanding of risk management.
To understand risk management, you need to also understand what risk is. And just in simple terms, risks are uncertainties that are directed to our goals and strategies. Remember, when you start a business, you plan to succeed. And to succeed, you set up goals, you set up plans, you set up strategy, you have your mission, vision. So anything that could cause you not to achieve your mission and vision is what then we call risk. And as you think about risk, you also have to think about both opportunities and the threats. So it has both sides. So a risk can provide for you opportunities which you can exploit, or you can have threats which you need to minimize or mitigate. So managing risk is all about managing your business uncertainty that can impact your goals, your achievement of goals and strategy. Thank you.
Madam Alice.
Good evening. In simple terms, risks for me, for my clients is, all of us have these organizations we are running. Any harm that would come to our organization, to our businesses, that would hinder the operation of the business, that I would call risk. Then risk management is trying to identify those things that would stop our operation of our business. So identifying them, finding a way of measuring them, and deciding what to do after you've known this is the risk and this is the impact it will have on my organization. Then what do I do? Do I avoid it? Do I transfer it to someone else, who in this case is the insurance company? Or the different ways of handling this risk. So basically, what do I do with it after I've identified it? That is what risk management is.
Thank you very much, Alice. Now, since you've understood what risk is and what risk management is, maybe just to move to the next step and ask ourselves, especially for our SMEs, what are some of the examples of risk that our SMEs are exposed to, and in one way or another, they are not aware? So maybe I'll shoot this question to Madam Alice so that you can organically bring up the explanation on the same. The risk that our SMEs that actually they are exposed to, and in one way or another, they're not aware, but they need to be aware.
Okay. The two broad categories would be the internal risks that are happening within the organization. And then we have external risk, things that are happening outside the organization that could have an impact on your business. So internal risk could be, for example, the way you run your business. So say this is a restaurant you're running. You have a way of maybe preparing the food. You have a way of setting the table. You have a way of arranging the office, the restaurant, so that it is not risky for the client. That is an internal risk. External risk will be things that are beyond your control, things in the environment, things in government. Those are not within your control, but they can affect the business. So those are the broad categories of risk. But then now when you get down into it, some of the risks that SMEs may be having and they're not even aware of, we have what we call legal risk. Legal risk would be, for instance, have you registered your company the way you're supposed to? Is your company a limited liability, or is it a company? And if it's a company, have you done the paperwork correctly? Doing it the wrong way could actually cost you, and it can cost you such that you even close the business. So that in itself is one of the things we talk about, legal risk. Then we have something we call market risk. So market risk is where you have, I've started this business for a specific niche of client. Have you checked whether indeed the product you're selling or whatever you've come up with is actually going to meet the need of this niche? If it is, then you have aligned your product to the market. Sometimes you come up with a product that is not correct, and then you try to sell it and it's not working. So you end up investing in a product that does not meet anyone's need. And so you end up losing. You've put money in it and that product doesn't pick, or that service doesn't pick. So that is market risk. The other risk I can think about is You may have capital risk. You have started a business, then you run short of income. What do you do? It's actually a risk that maybe you did not foresee it. Yeah, but it can actually happen in business. So these are some of the risks that SMEs actually have. These are either insured or they're not insured, but they're risks in the organization. That's what I would say. Thank you.
Thank you very much. Mr. Simon, what's your thought about this?
Thanks, Olympia. And Alice has already done justice to, I think, that discussion, but I can maybe add some snippets on some additional risks, especially looking at an SME perspective. From a business angle, a lot of businesses, it's one person who does everything. So, from a business perspective, business risk, there's the risk that if they're not there, then the business stops because they're everything. So I think the direction is for a lot of SMBs not to become a one-man shop where you are doing everything. Learn to separate the risks. I'll also speak about compliance, especially from a finance perspective and bookkeeping. Right now, there's a lot of sort of call for people to be compliant from a tax perspective. And I'll give an example of an SME that had actually gotten access to an opportunity to access financing, but they could not get financing because when they were requested to provide audited or financial book of accounts, they didn't have any because they were running the business purely on, I have money in, money out, but there's no record. So they lost an opportunity to access financing as a result of not being compliant. And nowadays, with KRA becoming very, very, very aggressive in terms of requesting for audits, if you're sent a claim or a demand note and you've not been keeping proper book of accounts, it's not possible. So you're not able to defend your tax position. So from a compliance perspective, it's important for businesses to ensure that they keep proper books of account. Then from a financial angle, it's more on access to finance. A lot of businesses, especially now with high interest rates, if they find themselves struggling to access credit from financial institutions to enable them to execute some of opportunities that they may land on from a business side. So I will speak about those three, and also on the examples that I have highlighted from a risk perspective. Yeah, thank you.
Thank you so much, Mr. Simon. And now, Grace, I've just read your bio and you have that experience for 14 years. Madam Alice and Mr. Simon have mentioned a number of risks that the SMEs are exposed to. Sometimes you might find that they know or they might not know that they are exposed to these risks. Now, a question is it that the risks that have been mentioned, they are unique to SMEs, or even the same risks are actually the larger corporations are exposed to?
So what Simon and Alice have said is very right. And you will find that for risk, for large corporation, they have the same or similar risk like SME. The only difference is just the scale, the significance of the risk, and also the nature of the risk. Let me give a good example. So when you talk about financial risk and not being able to raise capital, so you'll find for a big corporation, they will look at it in terms of the minimum that is required in terms of capital to run it effectively. Let me give a good example. Like for a bank and for an insurance, you have a minimum capital that is set. And like for an insurance, you'll find it 600 million, which is quite high. This is capital where you are not using it to run your business. It's not like your operational capital. It's capital that you're holding just to be able to secure your customers and their investment in terms of buying a policy. So you'll find that in a corporation, the scale is quite big. There are certain risks that are specific. They now are a bit like specialized for corporations. Like when you talk about market risk. So market risk, you have to think about how does a large institution, once they collect their money and they have excess money, how do they invest? Some of them may choose to invest in stock for a return. Some may choose to invest in long-term bonds. Some may choose to invest in, they're called short-term investments like money market and even fixed deposit. So you will find they monitor the performance in terms of return very closely, just to manage the risk of losing their planned income. So you'll find for SME, that's not maybe that because of their limited capital, they may not be heavy investors in money market or bonds or shares, or they may not even invest at all in those options, either because the capital is limited or at times even the information is not available for them, what they can do with their excess income. Again, we have other risks that are specifically to an organization that is large. You'll find we have a broad aspect called technical risk. So a technical risk, you'll find that it involves systems, and you'll find a big corporation has 2, 3, 4, 5, 6 system, how one system talks to another and integrate and passes on information can be a source of risk, so that you find you have data mismatches. And this causes a lot of work that happens around the data and making decision. So you find that is usually highly faced by large organization as compared to SMEs. But other risks, like, for example, environmental risk or risks that are external to the organization. In the current environment, we have excess rain, which are causing floods. That is common to all organizations. You'll find the SMEs are still facing the same thing. You'll find risk like political risk. So both large and SMEs would be facing the same kind of risk. And you'll also find other external, for example, even competition. So the large and the small enterprises, and the medium enterprises all face competition. So those are common. The other big risk maybe for a large corporation, which in scale and significance again, is third-party risk. Let me take an example of an insurance company or even a bank. We are supported by so many third party, right from the system provider, from suppliers, and we also acquire business through intermediaries. Intermediaries are your agents or brokers. All this is a combination of different parties who sit outside the organization. The way you communicate with them, the way you deal with them, the way you contract with them can create some risks, and this needs to be managed, and this can be a big time risk. So that is the difference. So largely we have the same risk, but the scale, the magnitude, and the nature is different when you look at SME and medium and large organization. Thank you.
Thank you very much, Madam Grace. And just to move to the next step, and Madam Alice, since you're dealing with SMEs across the board and you are a member at Sandbox, you've interacted with the entrepreneurs across the board. When you're trying to talk to them about matters, insurance or risks, let me just talk about risk management, especially in their specific niche. What are some of the myths that have come on board or misconceptions that you find actually this needs to be corrected?
The topmost, and it's not just SMEs, it's even individuals, is that risk, setting a budget for risk is in the back burner. You do that when you finish every other thing. That's when you start working on your risk management. But what I will usually say is that, and I think part of the reason why people think that taking care of risk should be the second thing is because it's imagined that it's this big thing that you need a big budget for. And you see, when you're starting business, that's not the first thing that you're thinking of. But I usually say, you know, for instance, one of the ways of handling risk is transferring it. And transferring means now you give it to my colleagues here in the insurance industry. Now, most people, especially SMEs, insurance is not the first thing you want to think about. And it is really one of the important ways of reducing the risk, because that risk can actually cause the business to close. I'd like to give an example. For instance, the way it's been raining heavily right now. See, some of these houses belong to people as investments. So there are owners who, these are their houses, and now they're flooded, meaning their tenants will leave. Now, when your tenant leaves, first, your house is damaged by water. And then the second thing is you're losing income because now no one wants to come in there. Now, if you asked me, just putting in an insurance in place for that house, we usually under fire insurance, and fire insurance will come with what we call allied perils, which is the floods and all that. Putting that in place will give you peace of mind when something like this happens, because even if your house is damaged because of the rain, insurance will compensate you for that. Then you may lose your tenant. And for the period that you don't have an income, if you had extended your cover by buying what we call business interruption, then the insurance will also pay you for the days that you don't have a tenant in your house. So some of this by SMEs are thought to be a second thing to be looked at. But I would say when you're starting business, if something is important to you, see how you can safeguard it against harm, safeguard it against the risks that we're discussing here. So that's one of the challenges that SMEs have. The other thing is that SMEs would feel like they maybe don't have a lot of assets to take care of them, to protect them against this harm and calamities. But even that one, say, camera, if you're a photographer, or one laptop, if you're an editor, is a valuable asset, such that if you don't have it, you can close your business. So just taking care of the risk that this item would face is actually an important thing for SMEs.
Thank you very much. Thank you very much. That's a very good insight. Now, I'll just jump to Mr. Simon, who is an enthusiast around technology, just to ask about how is technology reshaping or redefining risk management for SMEs in the market?
Thanks, Olympia. I think when you look at technology, I'll try to address these questions from using key examples of risk. Like when you look at operations, we find a lot of people who are doing a lot of manual things in the past. So with digitization and automations and systems in place, entities are now able to have things like ERP systems that are able to keep track of their stock, finance systems that are able to do some level of accounting so that they also have their affairs in order from a compliance perspective. So I would say from that side of things, technology has really helped. Then secondly, access to data has also enabled both insurance companies and even SMEs to be able to be more aware of the risks that they face based on data. Then they can be able, at least to be able to map out what to take care of and what they can be able to absorb and what they can be able to give to the insurance company. I also see a lot of collaborations that has happened enabled by technology. So you see now a lot of SMEs have the opportunity to outsource non-core functions, which probably they are not able to absorb that risk. So if I see as a business, I am not good with HR issues, so I'll outsource that function to a partner who will support on HR, a partner who will support on finance. Technology, you don't want to be exposed to a lot of levels of cyber risks and fraud. So you'll see some entities also plugging in more expertise or someone who is an expert on that side to come and be able to mitigate that risk or help you manage that risk because they have the capacity. So going forward, even for us and insurance companies, data is going to help us to even price risks better for some of SMEs, because now what has happened is traditionally it has been an one shoe fits all from a pricing angle. But in future, an SME would be able to come and say, this is my data, this is what I would want you to provide for me. So I see a lot of specialization in terms of providing tailor-made solutions in future, and also creating easy ways of them to access these solutions and not the traditional manual approach. So technology will and has already started, and in future I think will play a key role in terms of mitigating this risk. It might not eliminate, but it will be able to mitigate some of these risks significantly, and help SMEs be able to scale and address some of these risks they're exposed to. Thanks.
Thank you very much, Mr. Simon. Now, I'll just still come back to Madam Alice. You've interacted with entrepreneurs and now you've known the myths and misconception around risk. Technology has come into space and it is here to stay. How are you seeing the landscape of risk management in the next 5 years?
Actually, you can choose to look at it as a positive or a negative. One of the key risks that I think I forgot to mention is there's risk that we have for your key employee. We call it key man. The main person in your business who, if they leave, the business may struggle for a while before they can get that person back. Now, I'm taking that if you have technology, many of these processes, you can document them so that any person can come and take. Of course, this person is key, but if you have technology, I think there can be easier duplication of this job by any other person so that it's not tied to one person. But if this person is key, again, we have a way to safeguard that. We usually call it keyman insurance. So technology would maybe make the keyman cover a bit less, because then you have documented the processes so that any person can be able to take up. You have records of the organization. You have automated your processes. So there's efficiency because of technology. The other thing that I think technology would do is for SMEs, you're able to document what the risks are. You have tools to analyze this risk. How impactful is this risk? Can this risk actually make the business close? And you can use that. You can use technology to do that. If this risk is not that bad, do I want to invest in this risk, to invest in mitigating this risk, or do I just avoid it? You can avoid by, for example, let me give an example. If you want to start, for instance, a business, and maybe the environment looks like it is not right now. You've already done your analysis using technology. You've listed the risks. You have assessed the impact of the risk. Is it going to be so big that I'll close the business, or it's a small risk? So you ask yourself, then, do I continue with it or do I avoid? So all that process will be made easier with technology if you're able to do that with technology. The other thing is that for a long time, people always have not embraced technology as it comes. I always remember the story of Kodak. Kodak is, they were the biggest in photography, and now they don't exist because technology came and changed things, and now you can do instant photos without having to go to the dark room, and you can have 5-minute photo, not the 1 month that we used to wait for photos. So just because you did not embrace, they did not embrace technology, it costed their business. So even for risk management, you don't embrace business technology, you take long to analyze your risks. Maybe you miss on some risks, or you put too much effort in a risk that is not that impactful to your business. So I would say technology would have positives. Technology would bring about efficiencies, so making your business even stay longer. Technology would cut waste. So yeah, technology is key even in risk management.
So thank you very much, Madam Alice. Now, I'll drop this question to Madam Grace, and then, yeah. Now, Madam Grace, I know you've worked with the Big Four, you've worked with the leading banks, one of the leading banks in the country, and now you are AAR, a leading insurance in the country. On matters risk management, what role does the leadership and the strategic direction play in the landscape of risk management? Now, as you think about it, I'd like to recognize our members who've just checked in. Masharia, karibu sana. Susan Omondi, karibu sana. Ramona, karibu sana. We have Kennedy Mwiruri, karibu sana. John Kimondo, karibu nyumbani. And Ann Nganga, feel at home. Just below the screen, we have our chat box. Tell us your name, the name of your company, where you are. Tell us how the session is. If you have any question, drop a question. I've got a very capable team working and will respond to you, and all your questions will be addressed. Now, coming back to Madam Grace, maybe I can just repeat the question so that even the audience can still follow. As I said that you've got 14 years experience across the board, and you've worked with the Big Four, you've worked with the leading bank in the country. Now, what role does the leadership of any organization play in the issue in the direction play or in the direction of risk management in the companies or in the market?
Yeah, you've asked a very important question. And when you look at SME, the leadership is the founder or the entrepreneur, and you have your team. It could be 2, 1, all the way to 50. And you have structured your team perhaps based on management. You have high-level management, maybe 2 or 3 people, and then you have middle-level management, or you could be the one-man show where you do everything and you have just one person to assist you and various third parties or suppliers to plug in, like, for example, HR, you have outsourced HR, you've outsourced your accountant and such. So leadership is very important. Remember what we talked about risk management. What are you managing? You're managing something that is very important, achievement of your goals and strategy. So the leadership comes in setting goals and strategy. When you started a business as an entrepreneur, your goal was to achieve a certain objective. For example, you wanted an objective could be like you want to have at least serve 100 customers in a year or 500 customers in a year. You want to be the best provider of transport services along a certain route. You could want to be the best provider of a hotel service, a medium-sized hotel service as you go to Makueni, for example, or in any other village. So you have those specific objectives. So the leadership comes in establishing an objective, establishing a strategy. And when you establish a strategy, you'll be looking at a strategy of 1 year, that is medium. You could have 2 years, you could have 5 years. So within those strategies, the leadership is the one who provides the lead in terms of what are we going to do this year? What do we want to achieve? Why do we exist? You're answering those questions. And as you are answering, you're jotting them down to just know this is why we are here, and you create the focus. So that is what the leadership does. Again, the top leadership sets the tone in terms of how then can we manage uncertainties that surround achieving our objectives. Uncertainties, this now are the risk and opportunity. Let me give a practical example. When COVID happened, it was a risk. It created uncertainties. We could not move. We had to now start buying certain things that we didn't used to buy, like the masks, the sanitizers. But what did that risk create? The uncertainty. There were opportunities. Some companies transformed themselves and reduced in production of maybe their plastic material. With the same machinery, they started producing like the masks, stitching, and also the degradable masks. Yeah. There were others who were able to provide some PPE. Yeah. So that created an opportunity. Who could have seen this opportunity? Is the leadership. looking at the uncertainties. What does it create? Does it create an opportunity or a threat? A threat is what causes you a negative impact. So the negative impact, now you're not able to receive your shipment. If you're getting things from a farm in a village and you're selling them in the city, like the fresh vegetables, your supplies were cut off. Maybe you could be able to do supply twice a week as opposed to every other day, apart maybe from Sunday. Yeah, so the leadership creates that vision and looks at what could go wrong and creates strategies around managing what could go wrong. So in your terms of strategy, you can say we are going to eliminate the risk. Yeah, so if in case of eliminating, you're saying we are going to ensure that our business is properly registered so that NEMA will not walk in or KRA will not walk in and start asking for and penalize us. And in some cases, you find that they even ask for bribes. So at least the leadership charts that way in terms of even how do we manage these risks and especially the big ones, the one that would make the business go down. The leadership is really, really focused. Anything that's going to make the objective of the business not to be achieved. They are focused in ensuring that they minimize it. They can transfer it to an insurance just to create a buffer and ensure that the business can continue into the future. So setting the tone at the top. Yeah, so they're setting the tone at the top, identifying the strategy and what would go wrong. Yeah. And also, again, the other thing, again, is to just ensure the big ones, the ones that would really impact the business, are well being managed.
So thank you very much, Madam Grace. And just to have an overview of what we've discussed, the first session, and we've agreed that risk is here to stay for all the businesses, both large organizations and SMEs. And my great set of panelists have just mentioned just few of the kind of risks that businesses are maybe aware or may not be aware of. And among them is just legal risks. We have businesses risk, we have market risk, we have financial risks. But now we're coming in and understanding that actually technology is here, still exposing us to more risks. You get. But now we understand that issue of risk in an organization that's here, leadership in the organization plays a very key role. They set the tone on the issues of risk management. And Grace has just mentioned that one of the major ways of managing risks is making sure that you subscribe for an insurance product. So I'll just send a very a quick poll to my great audience, and my quick poll will be: do you have any form of an insurance cover for your business? Do you have any form of insurance cover for your business? So we have a chat section down here. Just give us a yes, a no, or you're not even aware. But you should not get worried. Don't be afraid of saying you're not aware. We have physicians of businesses here and you'll be sorted. Don't worry. So to my great audience in the room, Cyrus, Charles, I can see Nick, I can see John Kimondo from Arrow Limited, who is a land dealer. Tell us, do you have any insurance cover? Yes or no, or you're not aware? So just still discussing, if you have any question around risk management, and also it's a very great opportunity for the business owners and business managers in the room, just tell us. If you take an objective view of your business, where are you? What kind of risks is your business exposed to? Is it a market risk? Is it a business risk? Is it a legal risk? On the issue of risk, it's just thinking, but are you legally registered? Ama you just wake up, ukishapata hiyo 500 yako unasema done. So what kind of risks is your business exposed to? Thank you, Mr. Gregory. I can see you saying you don't have any insurance cover. Susan Omondi, maybe you can give me your name, if you're not, the name of your business, so that we can interact and see. We have people, actually the experts here will give you solutions You're not going to leave here empty-handed. That one I can tell you for free. And we really, really, really appreciate you joining this session. Masharia is a medical, not for business. Yes, medical, not for business. Maybe Masharia, you can come up again so that I can understand. Aha, Susan is here, is saying that the risk that the company her company or business is market and capital risk. Don't worry, we're going to go there and we'll still expound more on this. Let's keep the discussion coming in. Is your business, do you have any insurance cover for your business? Let's go, team.
I think Masharia means he has medical, not business insurance.
Thank you, Masharia. And what about now taking, if you have a business, have you taken any medical cover for your business? Cyrus, ashajicheka yeye mwenyewe. I'm happy now you at least you're getting answers. Once you objective to yourself, it's good to make a mistake, but once you realize that this is a mistake, you'll have a solution. Thank you very much, Silas. I'm really impressed by your openness. On land matters, John Kimondo is here saying that the risk is being swindled through fake documents. You end up buying hot air. Eish. Pole sana baba. And that is true. That is true. Thank you very much, sir. Let's keep the discussion coming in. Do you have any cover for your business? Insurance cover for your business? If it is a yes, I'll be happy. And what kind of cover have you taken? Because you might be taking the wrong cover for your business. You get. So if you have any question, just keep the questions coming. My team is very able. They'll address, and still I'll bring this question to the panelists to address them as we continue with our discussion. Thank you very much. Now, since we've talked about the issue of insurance, we need to look for remedies on how to properly manage these risks. And I'll throw this question to Mr. Simon. Do we have any practical strategies and best practices for SMEs, most probably, that can help to assess, map, and manage their risks in the organizations?
Thanks for that question. I think based on the conversations that we've had with the panel here, in terms of best strategies, so as Grace mentioned, the first step is, of course, to be aware of the risk that you're exposed to. So if you're not aware of the risk, then the first step is then to sit with someone who can be able to sort of map out the risk that you're exposed to. And Alice, one of the experts, is here. We also have a team of executives or financial advisors you can sit with and look at your business and sort of give it a 360. An expert who can tell you if you're running a shipping business, then you're exposed to your cargo could get lost on transit. You could be posed to some sort of legal liability of the customers you deal with. So then you need to do 1, 2, 3. If you're running, I see Kimondo there saying fake documents, then probably you need to do some mitigations around possible liability that you might expose to. Of course, you would want also to deal with legal risk by dealing with the right people who can verify and authenticate some of the land transactions that you're engaging that are above board. Yeah, so I think from a strategy perspective, it's important to sit with someone who can give your business some sort of a pulse check 360 degrees and tell you if you're in this business, then this is what you're exposed to and this is what you're exposed to. Then from there you can sit down and agree on which risks maybe the SME feels that they can be able to manage by themselves, or which one they would want to transfer. If they're not able to manage, they can be able then to transfer to a third party, and that's where the insurance company comes in to then provide that element of protection. Yeah, so I'll summarize it on that front.
Thank you very much, Mr. Simon. Grace, maybe you can give a very practical example from any industry. Yes.
Okay, that's fine. Simon has actually just mentioned some of the things you do in terms of risk management. And I would like, even as I give a practical example, I would like to broadly shape ways and strategies of managing risk in a way that is consistent, and you can quickly ask yourself, what am I doing in terms of this risk? One is what he said, you can, and what I also said is you can eliminate totally, like where you need cases where you'd have to pay penalty. If you're running PSVs, you know the kind of registration you require and how often you need to renew. So it means you don't have to wait for the month where you're going to renew, and then you'll be queuing at NTSA for 2-3 days. You can actually do it a month or two before, so you try to manage in terms of your time. You're not closing business for today and your income is not coming by. The other thing you can do to eliminate, again, you're looking at your business. For example, you are into agriculture, and when you're planting your crops, you know what kind of fertilizer you should be applying. You know what kind of dressing you should be applying. You know what kind of what you should be spraying to your crop at what time. So if you skip one of those, and many a times there are some sensitive crops, like even the French beans, what will happen is that the produce at the end of the day, and if you're doing even flowers, the produce at the end of the day. So you eliminate some of those risks, and even infestation from certain pests and parasites. You know what you need to do early before. That is about elimination. You can reduce your risk. What you're saying, I cannot take care of everything, but at least I need to reduce it to a manageable level. If you're operating your business and you are on a lower ground, you may want to get to a higher ground. For example, if you're operating from the ground floor and it looks good and you're visible and all that, if your customer don't mind using the escalator to be on first floor, on second floor, on third floor, why not be there and avoid things like flooding or your stock being infested by, like rodents. You'll find they'll slip into the small holes and they will start attacking the ground floors. Yeah. Why don't you go to, if your customers are not sensitive? So you're looking at ways of reducing. If you're also running your business, remember, you can also transfer. But even as you transfer, you can minimize the much you pay to an insurance company. For example, if you want to insure your property, we'll be looking at where are you located? What security measures have you put in place? What kind of doors have you put in place? Do you even have a CCTV? Can anyone just walk in, or they have to first meet somebody at the door? If it's an open shop that has grills, do you have proper grills so that you pass the product through a certain space, so that you avoid privileges where people are just picking your products from where they can get the products and just pick when you're not seeing? Yeah. So what kind of security measures have you applied? You could even have CCTVs. You could subscribe to some people who can monitor your business when you're not around. For example, you could use technology and you have someone who keeps monitoring even at night what is happening. And if you're if you're in an association, that can be used as a means of reduction, where you share the cost of like security. If you're in a market, why don't you pay everyone 200 and you pay a good security firm to take care of you at night? Then you can also look at now acceptance. There's some risk you can't do anything about it. For example, you import products from China, Singapore, clothes, for example, or you could be building materials. So you import those products. The dollar has gone up or is going up. Yeah. And you hadn't even saved the currency. Remember, capital at times is an issue. What do? You just accept this is where we are. And then what does that mean? You need now to price accordingly. So your price should be reflective of what is happening into your currency. And then the other thing in terms of avoidance, if you are weighing the risk and the benefits, and you are seeing the benefit of investing in a certain project or expanding my business by this magnitude is good enough. Don't avoid expanding. Don't fear taking the risk. Take the risk because the benefits are higher than what you're seeing in terms of uncertainties or the threats. So those are some practical examples. And the other thing in terms of succession, and this is what we face in terms of business where you're just a one-man show. We could approach it the way the Indians community approaches it, or even the business people who are into Isili, for example. A business is run by a family. Do your kids know what you do? If you fell ill, can they show up at work and they are able to stand in for you? And it's a practice that you have to start early in life. You don't have to wait for them to be 18 years. They can just show up on a Saturday. They are maybe 10, 11, but they understand. So start creating those system of succession early. Thank you.
So thank you very much. Thank you very much, Madam Grace. Now, as we go on, I'd like to remind our audience, usiwachwe nyuma. Down here, we have a Q&A section. Drop in your questions. And as we discuss, make sure that you map all these discussions we are having to your organization and ask yourself, where are you? So ask all the questions that are popping up in your mind on matters risk around your organization, and you're going to address them. Shout outs to Mary Maina, karibu sana. We have Winnie Kiarie, we have Njeri Lucy. We really appreciate your support. Thank you very much. And drop your questions. And still down there, we have a section for reaction. Kama unaona kile unaambiwa inakuchoma roho sana, give us an emoji, but don't worry. Remember Simon said that we can do a pulse check. I told you we have physicians on board. A 360 pulse check. We are here. We're going to answer all your questions as we continue with our session. Now, Madam Alice, you are our resident expert at Sandbox. You've encountered a number of SMEs and entrepreneurs. Maybe you can just share a practical example on a number of your clients or entrepreneurs, how they manage their risks or avoided, or there's a problem that happened with risks on anything around risk. And I'm just really kind of looking forward to understand how they manage that risk, and now upon managing the risk, improvement of the performance of the organization actually was felt by everyone across the board.
So one of the risks we talked about was actually legal risk. So an SME that I know of was operating a business without having done proper registration. So what they did is that they engaged a lawyer. They got a lawyer to now put their papers in order. And it didn't cost them that much. So now they're comfortable. Even when you're reporting, when you're doing your returns, you're confident at what you're doing. So that saved them from being closed down by the taxman, because you have registered and you're reporting you're sending your returns as they're supposed to be sent. The other thing is, apart from registering properly, is also because they were not registered, they were also not filing returns properly. And again, they engaged a tax expert, and the tax expert helped them, even advise them that there's usually waiver. We can actually approach KRA and they will be able to waive this. It's not, we always imagine that KRA is going to close your business. So you don't even want to find out what it is that you've done wrong. But just engaging an expert in that particular field is actually one of the ways of managing risks. We are transferring not necessarily to an insurance company, but to an expert, because then they'll be able to advise you what to do. So that helps the SME not to close and also not to have to pay all that penalty that they were imagining they're going to pay because of not avoiding tax, but not filing it properly. The other practical example I have of an SME is they had assets. They had started a business and they had bought assets, and good enough, they had insured the assets. They were a small organization, but they had done it. And just the fact that they had that, they lost, for SME means small and medium enterprise. So for the small business, assets like laptop are a huge deal. So they had actually insured the laptop, and when they lost the laptop, they were able to be reimbursed by the insurance company. So that helps the business to continue. Now, as I'm giving those examples, I'm not just trying to market, but I want you to, when you're doing your risk management, the question you need to ask yourself is, what is important in this business? What, if I lose in this business, will cause me to close and not continue making income? That which is important, see how you can safeguard it. If your business needs to work because you have registered properly, then go ahead and do the proper registration. If your business will only work if your tools of trade, your laptop, your camera are intact, then go ahead and insure them. If your business will work by not being sued, because your clients can come to your premises and something happens to them and they sue you and you close a business, see how to go about handling that. So there's this particular instance, what we mean is that you make sure your liability is proper. Because liability basically means that someone can sue you, and if the court awards, you have to pay them. So you're covering yourself against such suits. And how do you go about it? Again, you can also get a risk expert to advise how to go about it, how to go about covering yourself from that. And also just finding out what people in your industry are doing, so that you borrow a leaf from how they are covering themselves from the risks in the industry. But the people who have seen survive is that they have tried to put their paperwork in place. Where you're not sure, you engage an expert. So they advise you what to do. And, it's a simple thing as e-teams has come. You're supposed to give your invoices in e-teams. Do you know what that means? No. Ask a tax expert. Just give the people who are good in a particular area their work. Let them do their work. You pay for that service, and that way you'll safeguard yourself and your business, and of course have a long-term business to speak. Thank you.
Thank you very much, Alice. Now, Grace, this one will come to because of now the kind of clientele and the institution you've worked with. Now, speaking of leaders and microfinances in the market, could you give an example of the success and failure stories around risk management?
Thank you so much. So we have, if you think about microfinances, you think of that lender who is able to give you 100,000, 50,000 for a certain interest rate. Of course, the microfinance could be quite expensive in terms of financing. But what would happen is that perhaps in our area, that is the only available source of financing that is fast, can be processed fast. It requires minimum documentation. And also, they can actually visit your business. They are very flexible. They kind of come to see what you're doing. And even as they give you some loans, some of them will advise you. We also have the ones that are on phones, like the branch teller and all that. So those are sources of financing. When your stock is stuck, when the vehicle is stuck on the way it's supposed to be shipping and it needs to be repaired, you send something small and the vehicle continues with its journey to bring the supply. Like if it is vegetable, if it is supply of furniture, if it's supply of timber, depending on your business. Now, if you're into a microfinance, there are certain risks that you face. So the big one is on collection. How do you collect this money? Yeah. And you have very little information. For example, even when you look at the credit bureau statistic, sometimes you have very little information depending on whether this customer has ever even borrowed money or not. So what can you do? In terms of risk management, if we come together as microfinance, we look at the successful microfinance. What have they done? Most you'll find, and also from your own experience, you'll find there are those 3 or 4 questions you can always have as a way of assessing your customers and saying, you're looking at maybe the first question, which industry are you at and where are you doing your trade? You could be able to pick, that is an area that is has a lot of customer, has a lot of flow, and depending on the product, then you put a tick on it. There are certain questions you can ask. Are you a single person? Are you a family person? At times they say when you're a family person, you have a lot to lose if your business goes down. So you're more careful, yeah, because you have to take care of a bigger family. So you can set up your own questions, yeah, in addition to even the credit bureau companies. The other thing is that you may want to outsource collection. Remember, you are a financier, and maybe you're just operating from the area where Githurai, for example. Just most of your customers are just around Githurai. You may not be able to reach all the sections in Githurai, but if you have that collector who has a laptop, who is able to make phone calls, you can supply some little credit to them and they make phone calls regularly to follow up credit. It can be really, really helpful. And some of these you pay just on a retainer. The other area is at times you may have to think about government. Government comes in very handy when you have a defaulter and you're not able to collect. You're also in various other businesses and you have a defaulter for sure, you know they can pay, but they have just refused. Can the police come in and help you collect? You have to be friends with them. You can make them your partner in business. If you're into a restaurant, for example, or into accommodation, you can make a police your friend because you will find people who use your service, they misuse your service, and they don't pay, but they have the ability. So you can use local example and good example to just help you collect the money. The other thing in terms of just as a last thing, for businesses, you may decide how much lending can you give. If you've put in 100,000 as your capital in terms of your business or 200,000, you cannot lend beyond maybe 40% of your business. Your money cannot be outside. 40% of your money cannot be outside because what that does, it cripples your operation. You need to set a limit and 20,000. And within this 20,000, I can give this one 5,000, this one, you know, depending on your business. But you cannot surpass your capital limits to a certain level. Thank you.
Thank you very much, Madam Grace. I think that's clear. Now, Simon, speaking of technology, and now Kenya is not an island. We need to compare ourselves with what other countries are doing and other markets are doing. Just try to compare what the markets we have in the country and what others are doing out there in terms of SMEs. What different things are they doing or strategies are they doing that we are not doing in the country? Or what are we doing that they are not doing on matters risk management?
Thanks, Olympia. So I'll give my answer in three phases. So one, in terms of awareness here in Kenya, both even from an individual, even when you go, I think the awareness has not been as we would want it to make people aware of the existence of these risks and also strategies that they can be able to use to mitigate these risks. That's why even when you did the poll and you asked how many have insurance of any, majority of them would say no. So how do we then present information on the need for businesses to be able to become aware even before they start on strategizing on how to mitigate this risk? How do they become presently aware of some of the risks that they're exposed to? That's one. Secondly, I would say from a governance perspective, I know we've had so many setups that speak to SMEs, bodies, but I think from a governance perspective, maybe there could be more impetus in terms of creating good, like the way we have bodies that speak for cooperatives. Probably we need one for SME that can be able to push a lot of advocacy in terms of making a lot of these things aware. And I like what Wild is doing with the sandbox environment, which is one strategy in terms of capacity building to make it easier for businesses, small businesses, to become presently aware of things that affect them and how they can mitigate them. Regulation would also help from a governance perspective. I think the only one place that I've seen governance related to SMEs in the UK, or even they track, even in the insurance perspective, they can tell you this is the business that we got from the SME sector. So maybe we need to take the SME sector seriously for us then to focus initiatives and strategies that speaks to them from a product design perspective, from advocacy in terms of lobbying for things that work for them, both taxes, everything targeting SMEs. Then I think last but not least, from a technology perspective, data would be very critical. And Gresant spoke about finance and microfinance sector. And one of the key sort of risk mitigation sectors aspects that has helped this sector is the CRB. So the Credit Reference Bureau, as much as it's not correct, or anyone might, it gives these institutions some level of rating to say whether this person we should let them the money. And this data is based on history in terms of how you've lent, borrowed money, repaid, and based on your repayment, then we are able to give you some sort of rating. So from a data perspective, if we can be able to integrate a lot of the data ecosystems from a business perspective, CRP, tax data, or any other form of data that adds value to SMEs, then an SME can be able to use that data for themselves, maybe to evaluate the risk that they're exposed to. And even from a pricing perspective, even insurance companies using that data, they can then be able to price this risk accordingly. As I had mentioned, the challenge that we have is one shoe fits all. So then there is some level of sort of tailor-made solutions for based that is backed by data. So you're not coming and telling this person, oh, our rate is 5%. So that this SME will come and tell you, this is me, this is the data, I have been paying my loans. If they're accessing finance, they can be able to access data that supports their case and are able to get good pricing. So I think data will be very critical for us going into the future, and it will pretty much be able to help us become aware of the risk that you're exposed to, and even provide some level of confidence in terms of being able to price some of these risks and provide solutions accordingly. So I think I would give a snapshot of those three perspectives with respect to that answer. Thank you.
Well, thank you very much. Alice, your thoughts?
I think one of the things that the other markets are doing very well when it comes to risk management is proper documentation of risks. So they usually would have a risk registry, where they would list all the risks that pertain to an organization. And then from that risk, they try and see which ones are impactful for our organization, and even if are they that bad? So they list the risks in the register, but then also indicate how much effort they would give to the risk, to managing those risks. The other thing that maybe we can learn from the West is trying to avoid the risk completely, either by handing over to someone else, or covering yourself such that it will not impact your organization. I'll give an example of Dusit. When the terrorist activity happened at Dusit, most of the shops there were actually compensated by the Dusit management. And how they were able to do that is because Dusit did not just have fire insurance in place, they also had liability cover. So liability cover would mean that if someone sues them, then the insurance will compensate them. So that is how they were able to compensate people. So you don't just take basic, but take full cover for yourself, such that you don't have any cost to incur when a calamity happens. And then the final thing that I think I would say that maybe we can learn from is having contracts. When you get into a job with someone, you document, this is what I am doing, this is what I expect from you, and this is what delivering looks like. When you do that, chances of being sued for not having delivered are very low. So just documentation is key, and trying as much as possible to have very low risks in your books by either transferring or avoiding covering yourself totally. Thank you.
Thank you very much. Now, I'll invite Grace Ann to just share 2 minutes, since I know the Big Four are covering the entire scope, but let's just come back home. The SMEs in Tanzania, Uganda, and Kenya, in terms of risk management, is there any difference? Or since you are East African community members, you're doing the same thing from A to Z?
So we are largely the same in East Africa, because you find we face similar risks. When you talk about, for example, weather, so you'll find like right now it's raining across, and so things like transportation is being hampered. So you'll find those are common. However, you'll find that across, like in Uganda, in terms of insurance, they are able to have more focus on micro products, and they sell very fast. So they are more open to micro products where you can come together as a group and pay just a little amount, or you could buy as an individual. And these micro products are products that you can actually buy even in Kenya. They are there. You'll find you have, like, AR has partnered with Airtel to provide a medical cover. So for every time you top up your phone with Airtel, there's a certain level of cover you buy. You could find you have an inpatient cover of up to 100,000. So these are something you can capitalize on in terms of your business, and you can even encourage your staff to capitalize on. So you'll find that Uganda, they would have those products. Then the other thing that you find, like across in Tanzania, they are very, just because of their culture, and socialization, they are strong in association, so they are better placed in terms of pricing their products. So like I take the farmers, they can all agree at the same time, you're going to, if you are selling these products to our neighbors, this is a price you're going to give. So what it means, even in our businesses, we can use that as a tool to mitigate our risks, so that as opposed to competing very hard and against each other, we can form trade association where we are able to price our products generally at the same level. Say we are going to sell this bag of this product at this price, regardless of where it's coming from. You see, all the buyers would want to buy from you because you cannot differentiate by price. So you try to protect each other as opposed to really lowering your costs. Yeah. I want also to pick from other markets, like, for example, the Western market. They are very good at risk management, and they really take insurance. A good one is like for you're into SMEs, and maybe your relatives and your parents, if their health is not good or something impacts on them, it also affects your business. Remember, perhaps you're the one who is also supporting them. So when you go to such markets, we have markets like Australia, US, UK, where you'll find the Kenyans there, or the Ugandans there, or the Tanzanian there, they are ready to buy a product. This is a health cover for their parents in Kenya, so that they don't have to be sending money every other month, to just cover their parents, and when they go to hospital and all that. So you'll find for something very little, they're able to have a 1 million cover where they can use both inpatient or outpatient, and they're buying from UK, they're buying from, so those are other things that we could borrow. A challenge to the East African market, of course, is to comply with the rules and regulation, so that we avoid things that are called penalties, having to go to court because you have not complied to one regulation or another, and you'll be surprised. Like even for like the e-teams, KRA is ready to help you, and there are people who are ready there to help you how to register, and so you just show up in KRA, you'll be assisted. Thank you.
Thank you very much. Now, just to have a recap. Yes, Alice, you have something to add?
Yes, I remembered one that is in it's in Africa, but down south. The succession planning is quite big there because I think there people believe in life insurance more than in the East Africa. So one of the things that they do is see, you might want to pass your business to your generations to come, but the business doesn't succeed. So we use life insurance as a form of succession planning. So you plan for your exit early, and how you go about it is that you can take a life cover that you pay for a certain period of time. At the end of that period that you've paid, you have secured your life for whenever death will happen. So you do, for instance, a 10-year whole life cover. That means that you're paying for your insurance for only 10 years, but the life cover will continue for until whenever death happens. So when you do that, you've actually secured your children's future. Whether and it doesn't have to happen. Like, you don't pay premiums until death happens. You can pay for a shorter period, but then you're covered for longer. So that's one of the ways I've seen. And I've seen Kenya is also becoming big on that. We've introduced a whole life that has a limited term of paying premiums. And on top of that, they've added something called critical illness, which now is both in the medical and in the life insurance. And this basically comes to compensate the insured in case they are diagnosed with critical illnesses, and different insurance companies will define critical illness differently. So things like stroke, cancer, kidney failure, such conditions. So when you have critical illness benefit, this is compensation to the insured. It's not for paying bills. So these are some of the things, these are the new trends that I'm seeing, and it's being picked quite a bit. Thank you.
Thank you, Alice. Thank you very much. Now, just to have a recap what we've discussed so far. First of all, Zablon Mwangi, karibu ndani ya nyumba. We're discussing risk management for SMEs. So just give us the name of your company, where you're located, and any question that you have regarding risk management. As I said earlier on, we have business physicians on board. We'll handle you properly, in a good way. Don't worry. When you hear something known as handling, no, it is going to we are going to handle you well and address all your questions. So down here we have a section for Q&A. Drop your questions. At the tail end, we'll have all your questions answered. So just drop your questions. We are aligning them, and we'll drop them to either all or one of the panelists, and they will attach to them. Now, just to recap on what we've discussed, is that as a business or as an SME, make sure that you are aware of all the risks that your business is exposed to. And one of the best way to handle this is make sure that you have a risk register. So my question comes to all my audience. Do you have a risk register in your company? And if yes, when did you last visit that risk register? When did you update it? Remember, the market is very, very dynamic. You can wake up, you can go sleeping knowing that today I'm okay. Unaamuka unapata imekuramba. So the question is, how often do you kind of update your risk register for your business? And then also my great panelists have given strategies on how to manage risk. One of them is totally eliminate it. Also share costs, and now also to accept. When you accept, you know that is a risk that you can manage. And one of the best solutions is taking an insurance cover. And remember, as we said, risk is here to stay. So the question is, you as the business owner, how are you going to approach this issue of risk management? So it's a call to action to all of us to make sure that, first of all, accept risk equal, and then be aware of the risks by having an active and daily, actually periodic update of your risk register, always, so that anything that comes on board that you've never experienced, I do know is going to affect you or hinder you from kind of achieving your set goals as a business. Make sure you update it. So now, just moving to the, just engage my team and audience. You have questions, drop them here. We're going to answer them towards the end of the session. You have a comment, you have a suggestion. We have the chats here. Drop your question, drop your thoughts and suggestions in the chat section. We're going also to check into that. Now, I'll drop all this question to all my panelists. Now, since we know there are myths around risk management, we know there is risk, and risk is not favoring anyone. The SMEs and also the big boys in the market are affected by risks. Do you think there are benefits of involving external advisors or consultants in the risk management process? And I'll maybe consider just one advisor or a consultant who is a kind of an SME can engage and help him or her in risk management process. So I'll just pick one, Alice, you give us one in different industries so that we see. You might find that not all consultants fit in all the industries. Sinukweli. So you can pick an industry and pick a consultant who an investor or an SME or a business owner can pick or engage so that they can work with them in the risk management process. I'll start with you, Simon.
Okay, thanks, Olympia. I think for me, in terms of, it's very important for someone to talk to an expert who understands the level of risks that one is exposed to, for two reasons. One is that you might think you're aware of all risk, but you might have blind spots of things that you've not taken care of. Secondly, you might be dealing with specialized sort of businesses that might need a level of indulgence on someone who understands how they operate and might also be able to guide you on those risks and how to mitigate them. An example, let's say, for example, if you're dealing in specialized areas like in the field of aviation, maybe someone might tell, or export business, you might need to be told maybe by the time you're exporting your goods, you need to have various documentations ready. If you're not aware, then that could expose you. You could take goods all the way to the other market only for them to be returned, and that's financial loss. So they could be able to guide you on the things that you need to have in place. That's one. Another sector maybe would be on the technology risks, especially when you're working with partners, or there are some contracts or agreements that you need to make sure, maybe clauses that are on the agreements by the time you're doing that business, just to mitigate on some of the things that Chris mentioned about currency risk. You could get into a contract and bill yourself in Kenya shillings only for the currency to depreciate, and you end up losing. So by having an expert who can be able to advise you on matters that you might not be, it helps you address some of these blind spots that you may have that could save you not to lose money or even to lose business entirely. I think those are some of the areas that I would say. But of course, you find nowadays with the growth in the sector, especially with a lot of SMEs coming together, I'm aware of a few bodies that do some level of capacity building. So sometimes it might be expensive to go and engage an expert directly on such matters. There are some who may be able to offer their services pro bono, but you find within bodies they do some level of capacity building, such that, like Wild is doing, you bring an expert like Alice who can then be able to engage these SMEs on some of these risks, and that might be an affordable approach because some of them are also looking at the cost aspect. So I think we can look at it from that perspective. Thank you.
Thank you very much. Maybe I can go to Grace Ann, then you finish with Alice. Grace Ann, you're muted. Kindly unmute.
I'll speak to manufacturing industry, and you'll find manufacturing industry has a lot of processes, and the costs also are quite high depending on the process. You may want to get a consultant who is an efficiency consultant, who identifies what are your key processes. For example, if you're processing plastic materials and plastic kind of outputs, they will identify what are your key processes and be able to tell you how to cost for each process, so that then when you have wastages within the processes, you know how to manage. So if you have a key process where maybe it is a mixer or it's a certain mold, you're able to tell this is where you should focus as much as possible to ensure that output is 100% or 80%, the products that are coming out. Why? Because 80% of your cost are concentrated on a certain process. Such a person also helps you write down your processes so that there's continuity and succession. If you change your stuff, people can always refer to them. Another area you can, for most businesses, if you deal with other third parties, you may not know who is the right partner to deal with. Like the audience, the attendant who has just said they're into land businesses, you may not know who is the right partner and who will give you the right document. Sometimes in certain businesses, you can get a consultant who can be able to help you vet your third parties, the people you will deal with. So you don't deal with people who don't deliver, who don't pay, who are not compliant. You also don't deal with fraudulent people. Yeah. The other area is on financial institution and most SMEs. If you have a way of texting your customers, telling them, we are happy with your services, most likely you have applied you have engaged a certain company to be able to send automated SMS, or it is a software, automated SMS to say happy birthday to you, it's good to reach out to you. But you know, there's already a risk in that. That is called data protection. When the customer walked into a shop to buy a certain cloth, did they say they want to be receiving that message? Yeah. So you need to be aware. You need to protect their privacy, but you need a lawyer to tell you how to protect privacy. They may tell you, why don't you have this app on your phone so that when a customer buys, it sends them a message to either accept receiving marketing messages or not. So it becomes easier to comply. You'll not have somebody coming to approaching the business and taking a legal suit against your business because you keep sending messages to them. Finally, you need a person to help you with your business continuity. We cannot run our business for 1 year, for 2 years, and we cannot run our business for the purpose of survival. It has to be for the long term. So a business continuity expert is able to help you, like even when you're impacted by flood, how do you bring your businesses back and operation back as fast as possible so that when customers reach out to you, they know they will get the produce, even if you're still impacted by something like fraud, even if there's a breach to your business in terms of your system have been hacked. So you need a business continuity expert to make sure your business survives over and above what you intend it to survive. 10 years, 20 years, 100 years. Thank you.
Thank you very much. Madam Alice.
So I'll speak for SMEs in general, not a specific industry. I was just thinking one of the things that can help SMEs is if you operate in relationships, mentorship. So you're not a one person. Yes, you're a one person business, but there are other people who are with you in that industry. One of the things I've seen about associations is that they help you to lobby for if things are being fronted that as an association, as an industry, you don't feel it will work for you. When you're in an association, you're able to present a united front and argue your case for it to be considered. So try and find as an organization if there are people like you who you can work together with, and people who have even gone before you in the industry, who have started and what are the challenges they faced, so that you don't have to go through the same thing they went through, when you can actually just learn from them, and as opposed to learning from your business. The other thing that I think I would encourage also is to check what your industry regulation requires. For most organizations, there's the minimum you're supposed to have in your industry. So do you have that? As you do that, you're actually trying to avoid also risks for not being compliant. Many professions like doctors, engineers, there's requirement, your professional requirement. Are you within that profession? Have you put in place the things that are supposed to be in place for you to operate in that business? And then finally, there's and this usually comes as a surprise. What does the government of Kenya require of your industry or of your business? Are you with the right license? Like, do you know that if you have one employee, there's a certain license that you should have, as opposed to someone who has 3 employees? It's not the same. Do you know the difference? So having an expert to teach you those things so that you don't make a mistake. You know, the law says ignorance is no defense. You can't say, I didn't know. When you're caught, you're caught. So just having peers, mentors to help you work with you in the business, I think that will be a good thing. And then for risks that you feel are too much for you, transfer them. Transfer either to an insurance or cost share with a different, like even insurance themselves, they don't take all the risks in their books. They also outsource those risks to reinsurers. So if you feel like this risk is too much, find out if there's a way of transferring or sharing with someone else. Thank you.
Thank you very much. Now, actually, it is Q&A questions, and thank you very much, Mr. Cyrus, for your question, Wanjiku Mashari, your question, and just that I have an anonymous attendee. Ningejua jina lako, I could have given you a shout out, but now we're getting to the tail end of our session, and just to bring to your attention that members, in our chats we have our social media handles for AAR, for Britam, for Potter's Touch, and I'd like to request our attendees. There's a Google review for Wild International. It is in the chats. My team will still repost it if you can't find it in the chats. Click on it, give us a review, tell us how the session is, and as we go on. Now, towards the tail end now, I'll invite the panelists to give their final remarks while attending or responding to the questions that have been shared by our attendees. Now, I'll start with Mr. Simon. Is there a tool that we can use to map our risks and decide on how to manage it? And this, I'll request you touch on this question with issue of technology actually, you touch this with technology. So your final remarks, attending to the responding to the question, and then touch with it, putting into consideration technology now.
Okay.
3 minutes. 3 minutes are enough.
Yeah. I think in terms of a tool to map out risk, I think I'll go simple, basic. Our traditional Microsoft Excel is a perfect tool for you. Of course, having sat with an expert to map out, identify all the risks, then come up with mitigation areas or strategies for each of these risks. If no one is able to do that, that's a good thing, especially for SMEs. Second level is that now systems that one can be able, third-party systems that can help someone to be able to map risk. So that's another level that someone could go and pay some amount of money to access such a system. Yeah, so over and above that, data will be very critical going into the future. Technology systems, I think, are a good tool for us to change the process in terms of how we do things. And collaboration, where you feel some risks are exposing you too much, you can always get someone else to maybe manage that aspect of the business on the basis that they've already taken care of that risk. In terms of my closing remarks, first of all, thank you so much for the opportunity to be in this session. I also thank my fellow panelists, Grace Kamau and Alice, for doing justice to this engagement. Maybe what I can say is there is a lot of wisdom that a lot of SMEs can tap in from the industry, for all of us, in terms of how they can be able to mitigate these risks. I think they should be bold to just ask around. We have so many financial experts, even here at Britam. We have financial advisors who can be able to give someone a 360, and experts like Alice and Grace Ann who can give an overview in terms of the risks that one is exposed to, propose solutions that can help mitigate these risks, or strategies that even the business can be able to adapt to reduce the number of risks. And over and above that, sometimes people fear that insurance is expensive. I think we have demystified that notion. Now we have solutions that are targeting the SME, well priced. So they should be very comfortable engaging. There is something for everyone from a pricing, from a product structuring perspective, and we always happy to engage them. They can always feel free to reach out to us in any of our channels, our financial advisors, and I'm sure we'll be able to provide a solution that speaks to any of the risk that they may want to ensure. Thank you for that.
Thank you, Mr. Simon. You're a very good man. Moving to, this is to Grace Ann. You spoke about the issue of medical cover, and just that the person is anonymous, but the question is very, very pertinent. I'll read it verbatim. We are seeing quite an upsurge of senior medical cover, but the cost is quite high due to their age or lack of previous medical cover, etc. How do we get the seniors to get the medical insurance at affordable rates, which will help to get more seniors on board? And then you'll combine this with your final remarks. Maybe you can unmute. You're muted.
These are very important questions, because when you think about the seniors, and when I look at just the panelists, just as a representation of the audience, already our parents are above 50 years, and you have those M-Pesas you send, I'm in this medical facility, I'm in this medical facility. Some of them cannot even access, like right now when the doctors are on strike. At AAR, and I will speak about AAR, we have developed a very sensitive and also a very good medical product that covers the masses. Remember, many times you find that the senior cover is highly priced, and because of just their age, and at times the seniors do not have complication as much. There are some who have really maintained their health in terms of even their activity, so they are not as a risk as much as they are of age. So we have a product that we call Shwari, and this Shwari, we are able to provide a medical cover depending on the needs of your parent or your senior. If you have a senior, someone in your family, you're able to cover them for 1 million Kenya shilling. And for 1 million Kenya shilling, you can switch between the need of inpatient and outpatient. What that means, if your parent or if your senior in your family is highly dependent on outpatient, you have 1 million to use. If they are highly dependent on inpatient, you have 1 million to use. And how we can get this senior to get these affordable rates is that we keep talking about it. We keep talking about it in our channels. If you look at our LinkedIn handles, if you look at our Instagram, and as an example, what I am currently doing, this is something that is very, very important. It has very little limitation. The waiting periods are lower, are shorter. And why are we able to provide that medical cover as AR? It's because, one, we have selected a panel of doctors that are just near where your parents are. So we have panel of doctors distributed across doctors and hospitals across the country. We are able to get very good rates from the doctor and very good panel in terms of specialists and where you can pick your drugs. We have also partnered with like My Dawa, for example, checkups. You can get your supplies from the comfort of your home. You can just order and you get your supplies. how affordable is it? The entry age at minimum, at maximum is 84 years. You'll not get such a cover. So if you've not come into the cover at 84 years, you may not be able to go in. But you'll find most of the covers at 65, that's a cutoff. So what it means, you can enter at 84 or earlier. But once in the cover, we don't have a limit in terms of at what point do you stop being covered. It is a continuous as long as you're still living. So that is something very important, and it's a revolutionary product that is meant to reach out to the masses. So with that, I have covered the senior product, and I've also given a bit of facts about the pricing we have, how revolutionary the product is. And I believe this can be something important for your parents. Thank you.
Thank you very much, Chris. I'll close this with a question to Madam Alice. And Macharia Wanjiku is asking, does Kenya have something similar to the South African succession planning using insurance? And then you can combine this with your final remarks.
Sorry, I didn't hear the last part.
Does Kenya, you talked about succession planning for the South Africa as a country. So Macharia Wanjiku is asking, does Kenya have something similar to that on matters insurance?
Yes, Kenya actually has that. Most of the insurance companies that have life insurance sell that also as a product for succession planning. So basically what it means is that you sit down with them, you agree on the life cover that you want, I mean the limit of cover that you want. Then they'll tailor make for you a product based on your age and gender. So the younger you are, of course, the cheaper it is. The older you are, the more expensive it is, because older people probably considered high risk. And you see, this is covering you for life. So what usually happens is when you sit down with most insurance companies, they do have that. So they call it life insurance, either whole life, meaning that you're covered throughout life, or term life. But term life is not a form of succession planning, because at the end of that term, if death has not occurred, then the policy is over. So if your interest is passing on your wealth to your generation, then you consider what we call whole life. And most of the insurance companies actually have that. The additional thing that most insurance companies are also including is a critical illness. This one is also available in medical, and some insurance companies actually sell it even as a standalone, a critical illness benefit, where if anything was to happen, you're compensated because of that condition. And it's not necessarily to pay the bill, it's given to you who's the insured. For my closing remark, what I would say is a lot of us think that you need to be a big organization to do insurance, but I'll say it starts even with you as a person. If you're doing, this is a sole proprietorship, you've just started the business, your life itself is important for the business. So even before you get employees, you need to take care of yourself. You need to have at least medical cover for yourself and your family. You need to cover your assets, the things, your tools of trade for business. And if you're working in a co-shared space, the option you might have is to do cover for your asset in household insurance. So if it is a laptop only you have, you can actually take household insurance and include your laptop in that cover, because you're in a shared office space, so you're not able to do office insurance alone. The other thing that maybe you want to consider is insurance for your workers. And this one is usually mandatory. The government of Kenya requires that you cover your workers. And I'm not talking about medical, I'm talking about insurance against injury in the course of duty, what we usually call WIBA. So WIBA is usually mandatory, and you're required to take that for your employees. For most organizations, it's for 3 people and above. So if you have maybe just 1 employee, what you can consider doing for them is a personal accident cover, which is the same as WIBA. The only difference is that this pays if the cause of the claim is an accident. So don't fret. You don't have to be a big organization to take these. Products are available for different people. Thank you.
Thank you very much, Madam Grace, Madam Alice, and Mr. Simon. I think we've come to the end of our session, and I can say there's so much that we're going to pick as we go to rest today, and also now call ourselves to a meeting. Try to evaluate our business, do kind of a risk analysis, have a risk register, and now do kind of take the correct steps on mitigating risks in our organizations and also as an individual. Maybe just to send my sincere regards to my technical team. Shout outs to Madam Veronica Bosibori, Ian, Jesse, and Mr. Robert, the OG from Wild International. Also to recognize Mr. Musungu from Britam, and also Madam Sheila from AAR. You guys, you're great. Thank you very much. To my audience, we cannot, I can tell you for free, this thing has happened because of you. So thank you very much and blessings all of you. And just to remind that we have something on the chat. We have a review. My team has already posted. Kindly just click on that link, review link. It will give you an opportunity to share your thoughts on how our session has been. And at Sandbox, it's an open space. Give us a visit and we'll take you through, we'll have a discussion with you guys, and then we move together and we win together as entrepreneurs, as managers, as business people. Now, Sharia Wanjiku asked a question: how does Wild charge clients for engagement in their Sandbox? Masharia, that's a very good question. We are here to serve you. Just send us an email. Our team will engage you. Just send your email, your name, and the name of your business. Our consultants will engage you, and we'll have a discussion on how we'll progress on what kind of services we offer. And without further ado, I think I'll invite Mr. Robert. Kama ameguswa sana anaweza tuombea, lakini to give us a final remark as we leave. Thank you very much, team, and blessings all the way. Mr. Robert.
All right. Thank you so much, Bwana Olympia, for that amazing moderation. I think the audience really enjoyed how you were keeping them engaged and keeping them in the discussion. Once again, just to thank everyone who was a part of this. Our partners, we're really, really grateful. I think this would not have been possible without you guys. The wealth of experience and expertise you brought into this discussion is truly invaluable. To the audience, this is an ongoing engagement that we will be doing on a month-to-month basis, as I mentioned before. So always be on the lookout for that. You can see our social media handles on the chat. So feel free to follow, feel free to engage there, and be on the lookout for other sessions and other activities and programs that we may be conducting that can provide support to you. So I think with that, we can bring this session to a close. Thank you all. I know you have a small break tomorrow. If you're employed, if you're an entrepreneur, there's no break. I'm pretty sure some of you are still going to work tomorrow. So let me also just take this opportunity to wish you all a wonderful Labor Day. And thank you so much for sticking with us all the way to the end of the webinar. Have a good evening and good night.